the fifth in our Business COVID-19 series. Coronavirus is continuing to be a challenge for small businesses and entrepreneurs across the UK. The outbreak leaves an overwhelming uncertainty into the future for business owners, but this is a time where as a business community we need to come together and support one another. And we are lucky enough to work with organisations and individuals who are passionate about supporting entrepreneurs during this difficult time. One of those is our speaker today, Julia Elliott Brown, CEO and founder of Enter the Arena, the UK's leading equity fundraising expert and specialist coach, working exclusively with female entrepreneurs. As a serial entrepreneur, Julia has successfully raised millions of pounds in equity finance for business growth, and with 20 plus years of commercial experience, Julia is developing and building high growth startups. Today, Julia will be discussing what is going to happen in terms of your prospects for raising investment and the conflicting forces during COVID-19. Julia will be talking for around 45 minutes and then we'll have some time for a Q&A. If you do have any questions for Julia, leave them in the Q&A function on your screen and we'll do our best to get to them later on in the session. That's all from me for now, and I'll pass over to you, Julia.
Thank you, Chloe. Hello, everybody. Thank you so much for joining us today. I hope you are all safe and well and coping okay with being in lockdown on this absolutely beautiful sunny day. Well, it is here in North London anyway. I'm going to share my screen, take you through a presentation. As Chloe said, it's about 45 minutes. I'm really looking forward to answering your questions, so please do keep them coming and Chloe will deal with those at the end. So bear with me while I just do the technical bits. Right, so as the title says, what we're going to talk about today is raising investment in challenging times and the 5 steps that you need to take to raise critical equity finance for your business in 2020. I'm sure you're all very aware that equity finance is all about enabling you to raise the money you need by selling shares in your company to private investors who see the potential in your company and want to back you. What we're going to cover today is my advice about how you can raise investment this year, despite the significant challenges that we are facing as a society and as an economy. Now, we've been through difficult times before in the world of investment. We will undoubtedly go through them again, hopefully not to quite the extent that we are seeing right now with COVID-19. But it doesn't all have to be doom and gloom. We can and we will get through this, and I'm going to show you how. So do get a pen and paper ready. There's going to be lots of useful information in the next 45 minutes. And I'm really hoping, keeping my fingers crossed, by the end of this masterclass, you're going to see that there's a way forward and feel a little bit less gloomy. So let's get straight into it. So obviously it's a time of great uncertainty and we can't absolutely predict what's going to happen. We don't really know how long this situation is going to last. Many entrepreneurs, and you may be one of them, need funding now more than ever. And I imagine that, like many of us, you're probably feeling a bit panicked right now about how you're going to get through the next few months. Most entrepreneurs are running on a situation where funding is tight anyway. So the struggles you may be feeling about not having budget to pay staff or completing the projects that you've got underway, or actually even think about your growth plans, might be all on hold. And I would imagine that you are feeling quite stressed, probably working 24 hours a day, probably burning yourself out and not spending enough time on your health and well-being, which is really not great. And so it's really important that you can see a way through this. And, I imagine that you're confident that your business has got lots of potential long-term, but it can feel a little bit uncomfortable thinking about how you could ask anybody to back your business right now with everything that's going on. And I think especially if you've never raised finance before, it can feel pretty overwhelming. These are all very understandable feelings. So just my first point is I don't want you to feel alone, because most entrepreneurs are going through this right now. In terms of raising investment, my view is we do have to work off the assumption that we're definitely going to be in for a challenging number of months. I think we can't really hide from that. Some investors are going to see this as an opportunity to make smart investments in businesses that are going to give them long-term value. And there is money out there, but some investors will be holding on to cash, which you can understand. So we've kind of got to work with what we've got. But life does go on and business does go on. And this is a time for entrepreneurs where we need to dig deep. We need to get creative, because we need to keep the world turning here, and entrepreneurs are at the heart of much of the creativity and innovation that is going on to make the world work right now. So we've got to rise up to these challenges. Raising investment is going to be more competitive than ever. There's no doubt about that. But there will be opportunities for the very best entrepreneurial businesses if you go about it in the right way. Okay, so that's my job here today, is to talk to you a little bit about how you can get through this. So in the next 45 minutes, first of all, we're going to talk about how you can get through the next few months so that you can continue to build on your goal of growing your company, pay yourself a salary, I hope, and stop having sleepless nights really worrying about whether your business will make it. So that's the first thing we're going to do. We're going to take a look at how to make sure your business is as attractive as possible to investors so that you give yourself the very best chance of securing the capital that is available in the market. We're going to talk through adjustments that you might need to make on your raise amount and your valuation so that you can retain as much equity in your business as possible and get the returns you deserve on all this hard work you're putting in over the long term. And we're going to take a look at how you can run your investment campaign from your desk, which we are all fairly tied to at the moment. And this is all about leveraging your time and closing your investment quickly. No more endless networking coffees, no more group pitches, no more in-person investor meetings. Those things are all out of the window. And my promise to you is that what we will go through is a step-by-step strategy on how you can raise this investment that you need this year. So let me just quickly introduce myself. I know Chloe kindly said a few words about me at the beginning, but Julia Elliott Brown, I'm the CEO and founder of Enter the Arena, which is a fundraising, coaching and advisory firm, started in 4 years ago. And we are all about supporting female founders in raising investment. But if you are a guy, and I imagine there are plenty of guys on this call, don't worry, because everything I'm saying is applicable to all entrepreneurs. My experience as an entrepreneur is quite extensive. I've been in the startup world for over 20 years. I have founded, built, grown, funded a number of different businesses. So I do know what it feels like to be in your shoes. I'm not just lobbing some advice from the sidelines here. For my last business, which was a fashion tech company, I raised a couple of million in investment from angels, from the bank, from friends and family, from venture capital firms, and through crowdfunding. So I've been there, done that, got the t-shirt. And in the last 4 years, I've worked with dozens of entrepreneurs, helping them raise serious amounts of money from investors, whether that's through a private investment round, through crowdfunding, through venture capital, all super inspiring entrepreneurs like you who are amazing at what they do and have fantastic businesses. They just need some support in raising equity finance so that they can put some rocket fuel into their business and take it where they want to go. And these are the businesses that I've worked with across all sectors, from consumer to B2B, every industry you can imagine, from food and drink, healthcare, fashion, retail, technology, music, science, you name it. We've worked with clients across all sectors. And just as a slight aside, I also am a reasonably small investor myself in startups. I invest through crowdfunding, because I've got a real passion in supporting new venture, especially when there are so many exciting new businesses out there that are making a real difference with what they do. But what I've learned in my 20 odd years in business, raising finance for my own company and supporting dozens of entrepreneurs along their journey too, is that when times are challenging, there are a number of steps that you really need to get right, especially when it's crunch time. So I want to talk you through the 5 steps that I think you should be looking at right now. So the first one of these is about taking control of timing. So as I've mentioned, the next few months are going to be challenging. There is no doubt about that. If you are in the middle of a fundraising round right now, and some of you may be, this is what I would advise you to do. I would advise you to close any existing rounds that you've got as soon as you possibly can. Don't wait. Don't see if you can complete it. If you're halfway through, don't keep on plodding to try and get the rest of it done. Close it as soon as you can. There's a couple of options which are quite quick ways to close your round, and Seed Legals are the legal partner that I work with. I think they're fantastic, so I would recommend you speak to them about these options. A rolling close is one option, so that you can close the money you've got now on the round and take it into your bank account and get the cash, but keep it open on the same terms and the same valuation, so that if you get further investors along the way, they can still come in on that deal, but you've actually closed the money you've got now. So that's one option. And advanced subscription agreements are another quick option. This is basically where investors come in on a kind of on a loan that is an advance on your next fundraising round. So you take the money now, it converts into equity later on, usually at a discount. And if you do that properly using someone like Seed Legals, you can do that where it's still applicable for SEIS or EIS. I'm going to talk about that in a minute. But those are two techniques that you might want to use to close your existing round now. And any other investors that you're speaking to who are interested in investing, keep them warm. It's really important at this point to keep the communication going with prospective investors. Let them know how you're doing, let them know how you're dealing with the current challenge in the market, keep them posted on progress, keep them posted on your long-term plans, because fingers crossed they will come back and you're going to need them later. If you've got existing investors, again, keep on talking to them. If you've got existing investors who are active, they're the people you need to go to first. They may be able to give you a bridging loan until your next round. They may come in with proper equity investment, possibly discounted at this point, but keep them going, keep them talking. I mean, you may be lucky enough to have family who could support you through this period, again, with a bridging loan or an advanced subscription agreement. If you've got them, ask them. This is not the time to be shy about asking people for the support you need. But if you haven't spoken to any investors yet, you haven't started a fundraising round, and it's really important that I'm honest about this, it's going to be really challenging for you to raise investment right now. It's not the right time necessarily now to be going out and starting an investment round. There may be some exceptions to that, and we'll come on to that in a minute, but for most people, right now is not the time to be actively going out and starting to speak to investors. So if that's you, my recommendation would be to wait to raise investment if you can. And actually now, in these next few weeks, and we don't know how long it's going to be, now is the time for you to get really, really lean and hustle to buy yourself some time. So cutting your costs back as much as possible, because at this stage, it's essential that you control your burn rate and that you lengthen your runway. So burn rate, in a nutshell, is your monthly overheads, how much money you're losing every month, assuming you're not yet profitable, which many startups aren't. And runway is how many months you have before you run out of money. So the advice would normally be to have kind of 6 to 12 months of runway in the bank. And you're probably laughing your head off right now, because most entrepreneurs don't have that luxury of having that much money in the bank. But that's the rule of thumb that you should try to be working towards. And actually now that runway needs to be longer. I suggest if you can get to a point where you've got 12 months plus money in the bank as a runway, you're in a better position. But I do appreciate that is not easy for many startups. So what else can you be doing? Focus on what else you can do to drive revenue and validation of your business at this time. So many of you have probably already been thinking about this stuff. We're 2-3 weeks into this now, but thinking about how you can pivot to address market opportunities or reinvent your business model to get you through these times. Where are the opportunities in the current market? How can you make the most of them? Because in lieu of being able to raise immediate investment, you've got to be sharp. You've got to be thinking creatively about how you can generate cash. And there are other sources of funding. So, and I will share these links with you on the chat at the end. So don't worry too much about trying to scribble them all down now. Of course, there's government support in terms of business interruption loans, support with paying salaries. Not all of them are applicable to startups. There's a lot of work going on in the startup community right now to petition the government and tell them what it is that startups need in terms of funding. There's some discussion around trying to extend the SEIS, EIS in tax scheme for investors. So there's a lot of work going on there. But do look at the government to see what support you can get. Don't forget there are loans available with the Startup Loans Company. Innovate UK are very much still giving grants out to innovative companies. And again, lots of work going on to try and get them to speed up the process of funding businesses. So please check those out, and I'll share the links. Another one which is just applicable for female founders actually, which is SheEO, to have a look at. But also thinking of, if you're a B2B company that has got suppliers with 90-day payment terms, check out things like invoice financing to see how you can get cash in the door. Think about how you can do clever commercials with your clients. Can you get any of your clients to pay you up front to subscribe? You know, you've got to get creative now. How can you get some cash in the door? So that's kind of short term, no easy answers, but keeping your costs low, pivoting and looking at alternative sources of funding is the name of the game here. So next step is about strengthening your investment proposal. So as I mentioned, it's going to get more competitive than ever raising finance now. And to be honest with you, it's pretty challenging raising investment at the best of times, as many of you may be acutely aware. Shocking stat for you here. Success rates for those entrepreneurs that go out for funding are normally around 2%. So of those entrepreneurs that go out for funding, around 2% of them are successful. And that is probably going to drop quite significantly at this time, because investors are more risk aware than ever right now. And especially if it's your first funding round, the bar is being raised. Now, some industry sectors are going to fare better than others. So most of this is reasonably obvious, but companies in logistics space, in health tech, med tech, food and drink, ed tech, tools, platforms, anything to do with home fitness and lifestyle, media, virtual reality, Internet of Things, data, community type projects, fintech. Those are the companies that at the moment are going to be the hottest and of most interest to investors. Partly because we can see the way they can immediately address the challenges in the market, but also there's long-term potential there too. And we're already seeing actually right now brand new fundraising campaigns launching in some of these sectors. So Julie from Cheeky Panda, which is the toilet roll company that makes toilet roll out of bamboo, unsurprisingly is about to launch a crowdfunding campaign. Bonnie Chung from Miso Tasty, which is Japanese food products, also doing a follow-on round on crowdfunding right now. Both companies that have already raised before and both addressing an immediate need in the market. Other challenges are definitely going to be more challenging. Travel, retail, hospitality, leisure, fashion, fairly obvious. But if you are in these sectors, you're going to have to really demonstrate to investors how you are pivoting through this period and where the long-term play is in your business. Fundamentally, investors are looking for opportunities that are giving them a return on investment over the long term. You know, nobody's expecting a return within a year. Most investors are here for the kind of 5, 7, 10-year play. So focus on that. Show them how they can make a return on their investment in the long term, and also show them how the investment opportunity will resonate with them emotionally. Now, there are a lot of things that investors look at when they are assessing your investment potential. But I want to focus on 5 things that I think you can work on right now to strengthen your business and make it more relevant and interesting to investors. So first of all, proof of product to market fit is really critical right now. This is kind of what some people would call traction, but it's about really proving that customers really want what you've got. And you know, nice to haves are just not going to get funded right now. You're going to really need to show that your customers absolutely want and need what you've got. So what is the problem in the market? How are you solving it? And how can you validate that? So what can you be doing right now to keep showing that you are validating this product to market fit? Revenue is not the only way to prove traction. You can show growth in customer numbers, engagement levels, frequency of purchases, repeat business, customer satisfaction, testimonials, the value that people are deriving from what you do. Many ways to demonstrate that people want what you have, even if you're not managing to generate revenue right now. And those companies that are growing faster and showing that proof of product market fit is accelerating are going to be of more interest to investors than those that are growing slowly. So do bear that in mind. You're also going to need to really demonstrate your unique selling point and your competitive advantage, and more than ever, because only the fittest are going to succeed in these really challenging times. Many players in the market are going to go to the wall, and I think we can't escape that. I think a lot of the old school players are going to go to the wall, and I think this is where startups have an opportunity to do things differently, to be fast, to be nimble. And you may well have the opportunity to be the winner in your sector if you play it well. So you've got to show investors more than ever now how you are the best in class and how you are going to win the game in your sector over the long term. So think about how you can do that right now, even if you can't generate revenue right now. Understandably, you're also going to need to really look at your strategy and your financial forecasts and think about how you're going to address the challenges in the current market. You've got to acknowledge that. You can't ignore it. You've got to really go back and adjust and see how you're going to ride the wave, and also show how you're managing your cost base through the crisis. This is about surviving the next 12 to 8 months. And my advice would be to plan for that kind of worst case scenario in your strategy and forecast, to demonstrate to investors that you can still win this in the long term, even with a really challenging year and a half ahead of you. More than ever now, your team is going to be critical. So you're going to have to show how you and your critical team members can navigate your ship through this storm, as well as build a business with long-term value. So do you have the skills to pivot? Do you have the skills to keep calm under pressure? Can you lead through a crisis? Those are entrepreneurial skills that investors are going to be looking for right now. And do you have the critical success factors that your business needs to be successful? So holding on to those team members that will help you get through this, whether that's operations, marketing, finance, technical, product, you still need to show how you've got all your bases covered by your core team. And then finally, as I mentioned earlier, SEIS, EIS, so the Seed Enterprise Investment Scheme and the Enterprise Investment Scheme. This is where investors get tax breaks for investing in startups. So if your business fails, they can write it off on their tax bill. And it's been fantastic in the UK economy for encouraging activity in the early stages of the startup sector. So the government are being petitioned to extend that scheme to make it even more attractive. But investors are going to really want that. So if you don't already have advanced assurance from HMRC that you are SEIS or EIS compliant, I would strongly encourage you to get on the case with that now. HMRC are probably going to be inundated with responses. So please get onto that straight away. You just need to go onto the HMRC website or type in SEIS, EIS, and you'll find out how to do that. So those are the 5 areas I'd really advise that you look at right now. So third thing, let's talk about valuation and how much you should raise. And at this point, my advice is that you go for a Goldilocks valuation and raise just enough. So I shall explain that to you so that it makes some sense. In a challenging market, good companies can still attract investment. What you can see on this slide here are the typical valuation ranges that we see in the startup world for each stage of development, from idea stage through development, launch, traction, and onto scale. And it's a broad brush. There are some companies that will get multiples of this depending on all sorts of factors, but this is a kind of rough guide. But at the moment, clearly all markets, including the venture capital market, are dipping. We are in a bear market right now, and everything is falling. And in a bear market, more than ever, you need a Goldilocks valuation, a valuation that is not too little, but also not too much. And the reality is that right now, for many businesses, your valuation is going to need to take a haircut to be able to attract investment. And what I'm hearing from the market across all different types of investors is that we might expect to see a 30 to 60% drop. And again, it will depend on what sector you're in, how well you're dealing with current challenges, what the long-term play is. But I think you need to bear that in mind. So when you're looking at your valuation, you may need to take a haircut on it. But of course, what we want to make sure is that you don't also end up selling off crazy amounts of equity just to get that fundraise done, because that's going to screw you over in the long term. You'll end up with not owning enough of your company. So to avoid selling crazy amounts of equity, you're probably also going to need to adjust your raise amount at this point. So in terms of how much to raise, my advice is that you should just be raising just enough. So just enough to get to your next key milestone. So what is the bare minimum that you need to move your business forward to the next stage? And if you're doing your first round, and particularly if you're SEIS compliant, I would strongly recommend that you focus on the first £150,000 of your raise right now, because it's going to be pretty tough to raise more than that. And when you are SEIS compliant, only £150,000 is applicable for that scheme. Okay, so I just want to give you a quick example on the math. So let's imagine you were previously valuing your company at 1.2 million. And you're now needing to reduce your valuation to, let's say, 850k, so that you can get this a raise done, in the next 6 months. So you've got a pre-money valuation of 850k. If you focus on just raising just enough, so instead of raising perhaps what you might have wanted, which was a 300k or a 400k raise, just raise 150k. Your post-money valuation will be $1 million, which is 850 plus 150, simple sums, which means that the equity that you are offering at this stage is 15%, which is not bad. Okay, that's about a typical kind of rule of thumb for your first investment round. But if you were to still go out and try and raise 300k, 400k, you're going to end up offering a lot more equity at this stage. And again, you'll screw yourself over in the long term. So that's just an idea to show you how the calculations work. And at this stage, it's all about kind of smaller, more frequent rounds. I think what we do hope is that when things will pick up, valuations will start to pick up accordingly. By that point, you can use the money, the small amount of money that you've managed to secure, to move the business forward. You will be able to get a better valuation. But it's better to get some funding now or in the next 6 months to at least move your business forward a little bit, than not get funding and for your business to potentially die. So I think it's about adjusting your expectations on how much you can raise and on valuation. So fourth thing to really look at is how you can run your campaign online. Now, of course, the new reality is that you are going to need to move any fundraising activity you do online. And actually, I say, thank goodness for that. Personally, I am not a huge fan of pitch events full of rooms of mostly blokes in suits, where you're on a stage, you're put on the spot, you actually no idea who's in the room, and it's quite intimidating. You can end up getting quite a good grilling from people who are trying to make themselves look big and make you look small. And quite honestly, it very rarely leads to investment. It's quite a scattergun way of doing things. And I think I'm also not a huge fan of going to lots of sort of random networking events either, where you kind of hope that you might meet the investor of your dreams. It's kind of like searching for a needle in a haystack. And of course, there are the odd event, which are really effective. I'm not trying to kind of sweep aside all of those offline events, but a lot of them are not particularly effective at actually getting you investment. And actually, I've always taught my clients to run their investment campaigns online, because I think it is a much more effective way of doing things. And I'm seriously hoping that this whole crisis actually is going to make the industry rethink the way that we reach out with and connect with investors. Because actually running it online can be super effective. It makes you much more laser focused about what you're doing. But it's just about setting up a process. And these days, actually, that's pretty easy. We have email. It's a great way to reach people. It's a great way to communicate. It's still very, very effective. We've got social media, LinkedIn, a brilliant way to find investors, to connect with them, to find people that know investors so that you can get introductions. I mean, introductions is still really important in terms of your outreach. I think you're probably 10 to 12 times more likely to secure investment from somebody where you have been introduced, There is no getting away from that. So using tools like LinkedIn to affect that, brilliant, all online. You can organize your campaign really effectively using a calendar booking service like Calendly. I'm a huge fan of that. So you don't need a PA, you don't need to kind of overcomplicate it. You can set up meetings with investors really, really efficiently. We've got Skype, we've got Zoom. Who isn't on Zoom like 24 hours a day at the moment? You know, we're all getting used to this new world of actually speaking to people online and becoming more effective at communicating with them on a video conferencing call. So we have the technology to be able to do that. It's not quite the same as doing it in person, but you know what? It's not too bad. All the legal paperwork can be done online. We have e-legals now, which mean you don't even need to post stuff. You know, and institutional investors, you know, if they haven't already set up new working processes on how they're going to be originating deals, they will be very soon, because don't forget, all their usual deal flow pipelines have disappeared. You know, they can no longer go to events, they can no longer go to all the offline accelerators or hang out in WeWork. You know, they're not running, so they are all finding new ways too. And most of them are publishing those processes on their website, so it's becoming easier to contact them in many ways. And finally, crowdfunding. I mean, crowdfunding has been increasing as a route to raise investment rapidly over the last 5 to 6 years. It's a phenomenal way to raise investment for many businesses, not appropriate for all, but for many. And from what I hear, those platforms, the main ones in the UK, Seedrs and Crowdcube, are seeing quite a lot of activity at the moment. And they have always been a purely online way of raising investment. So just because we can't meet people in person is no excuse for not being able to reach out to investors and have great discussions with them. So that's great news. A couple of things to think about though. It may now take a little bit longer to raise investment. So typically it would take 3 to 6 months to run an investment campaign. So from developing your investment proposal, producing your pitch documents, doing your investor outreach, having all your meetings with investors and negotiating with them and closing, and then potentially layering a crowdfunding campaign on top of that, you're typically looking at 3 to 6 months. And I think now we might expect it to take a little bit longer, which is totally understandable. Don't forget, you know, investors are people too. They've got their own personal challenges. They or their loved ones might be getting sick. Most companies are running on a skeleton staff, so things are going to take a little bit longer. You may also need to have more meetings with investors now. So here's a sort of typical sort of number of companies you might expect to pitch to when you're raising. This is data that's come from 500 startups in the US. It's a couple of years old, but it's still very relevant. You know, typically you might expect to speak to sort of 30 plus people when you're closing your round. So now you might need to have more meetings, but the good news is that you can do them online. So you're cutting out a lot of time traveling and faffing around when you do stuff over Zoom. Just be careful that you pre-qualify people before you have an online pitch with them. Because at the moment, I think that there is a slight danger that there will be more time wasters around. A lot of people sort of sitting at home, twiddling their thumbs, kind of thinking, oh yeah, I might as well speak to that entrepreneur because I've got nothing else to do. And you want to make sure that before you have those kind of meetings that you understand that they are active, that they are a good fit for you, because otherwise you'll end up having lots of meetings and not really getting anywhere. So your goal is to speak to quality investors and try and reduce the number of investors that you speak to before you get funded. So we kind of talked through the first 4 strategies to put in place, which is about taking control of the timing, recognizing that the next couple of months are going to be tough. Focus on strengthening some key elements of your investment proposal. Really looking at your valuation and your raise amount to make the appropriate adjustments to be successful, and running your campaign online and understanding that you can do that really effectively. They're all really simple strategies. Doesn't mean they're easy. They're pretty hard to get right unless you take on board the 5th step that I'm going to talk you through, which is the most critical step, which is investing in your fundraising capabilities. And there are some key things you're going to have to get right as you go out to raise investment in what is a very challenging market. The benchmark, as I've said, is higher now than ever. You can't afford to get it wrong. So let me just run you through some things that you've got to get right. So you've got to have a strong mindset and be confident going out to the market. You know, if you're feeling wobbly about things, if you're feeling wobbly about your business, your strategy, you're not going to get very far. Your fundraising strategy itself needs to be really well thought through. So how much are you raising? At what valuation? Who are the investors you're speaking to? That's got to be right. You've got to make sure that your investment proposal is bulletproof. And this is about your business plan, the fundamentals of your business, your plan to execute it, where you see the business going. It's got to be better than ever. It's got to be bulletproof. You're going to need a stellar pitch deck, and your communication skills are going to have to be top notch. It's no good having a brilliant business if you're not able to communicate it to investors. You're going to need professional financial forecasts, and not just have them produced by someone else, but actually be able to explain them to an investor yourself, to be comfortable with the numbers, to be literate with all the KPIs and assumptions that investors want to understand. You're going to need to plan and run your investment campaign really effectively. There's no point in having an amazing pitch deck, brilliant financial forecast if you don't know how to run a campaign. You're going to be wasting your time. And when you do get in front of the right investors, you're going to need to know how to handle those discussions, how to run a meeting over Zoom effectively, how to close an investor, how to negotiate your deal with them. These are fundamentals of raising investment that you can't escape from. They've always applied, but they apply more than ever now. And I feel quite genuinely that now is a really good time for you to be investing in getting all your ducks in a row, to be investing in your own fundraising capabilities, mainly because you don't want to be one of the failure statistics, the kind of 99% of entrepreneurs that are not going to be able to raise investment. And all of the successful entrepreneurs I know, and that's myself included, know how important it is to get the right support when you're building your business. Whatever part of your business you're building, you need to be working with the best people to get you there. And it's really hard to do it all on your own. It makes sense to bring in expert advice, especially when you're working on a really critical project that you don't want to screw up. And it is tough being an entrepreneur. I know it can be a lonely old place, especially right now when you feel a bit cut off from the world. And it's quite easy to get really overwhelmed with all the things you've got to do when you're raising investment, with everything else you've got going on. It's very easy to spend your time procrastinating, putting it off because it feels too hard, working on the wrong things that won't take you forward. It can feel like a bit of an uphill struggle. But fundamentally, the extraordinary results you get about raising investment only come from working hard and working with the best resources you can find to help you achieve your goals. And so my view is that any entrepreneur worth their salt who is going out to raise investment, like with any other part of your business, needs to get the right professional support to get there. And the value of you being pushed hard to succeed, to be challenged with new ideas, to be held accountable for what you're doing is so worth the investment. It's about putting the rocket fuel, the rocket kind of underneath you so you can reach the goals that you're aiming for. And now, more than ever, is time to up your game so that you are ready for success when the market starts to pick up. And I don't think it's going to take that long. I really don't. There are angel investors right now who are active in the market. There are some that aren't, but there definitely are some that are active. And from a kind of institutional investment perspective, there are lots of VCs who still have funds that they need to invest. They have a mandate to invest. They may be taking a little bit more time to invest. They may be focusing more on their existing portfolio to help them through this, but they are looking for deal flow, particularly businesses that have got great long-term potential. So it is not all doom and gloom, but you've got to be doing a shit hard job of it if you're going to go out and be successful. So I would really strongly advise you to get support. And I just want to talk you through some of the things that, when you're going out there and looking for people who can help you with raising investment, whatever part of it that you're looking for help in, then I just want you to think about a few of these key things. So make sure that the professional support you work with has direct fundraising experience, that they're not just kind of lobbing you advice from the sidelines. If they've done it before, they're going to know what's involved. Make sure they're an entrepreneur that gets your challenges. It's bloody tough being an entrepreneur, right? We all know how challenging it is to run your business and raise investment and trying to kind of manage your family, your friends, looking after yourself in the process. It's pretty tough. So if you can work with people who are entrepreneurs, that's always, I think, a great thing for an entrepreneur. They're going to get what you do. If they've got experience from the investor's perspective, that's really helpful because they're going to know what an investor is looking for. That's critical. A step-by-step approach is helpful. Kind of general business coaching, in my experience, can be a little bit lackluster. If you're looking to achieve a particular goal with something, working with someone who can take you from A to B in the fastest time possible with a proven process, I think is a really good thing to look out for when you're looking for help. Obviously, you want somebody who's going to get you amazing results. That kind of goes without saying. And somebody who's going to really be there to support you through this, with kind of not just the technical skills that you need with fundraising, but the mindset stuff, the confidence stuff, and help you be accountable for your results. So those are the things I think you should look for when you're looking for professional support. So let's do a quick recap on what it is that you need to win in 2020 with all this stuff going on. So first of all, take control of timing, close any existing rounds you've got, keep existing investor relations warm, keep your business lean, and get short-term financial support where you can. Focus on strengthening your investment proposal. So tighten up your proof of concept, your proof of product market fit. Demonstrate your competitive advantage, amend your strategy and your financial forecasts, keep your team strong, and ensure you get your SEIS and EIS in place. Go for a Goldilocks valuation and raise just enough to get you to the next key milestone so you can avoid selling too much equity too soon. Run your campaign online and use all the tools that are available out there to do that really effectively. And use this time to invest in your fundraising capabilities. You know, the skills you need in raising investment, you will use them time and time again. I've never met an entrepreneur that has raised once and never raised again. You will raise money several times probably in the lifetime of your business. You need to get good at raising investment. Now is the time to focus on that. So just a last little bit on the presentation. If anybody is looking for any further support, I mean, I hope that what I've said today has been super helpful and is lots of useful stuff for you to go away and be thinking about. And I mentioned earlier on the call, I work exclusively with female founders. And the reason I do that is because, as I'm sure you know, there is a massive gender funding gap in the industry. Probably only 5% of venture funding goes to women-led businesses. It's pretty shocking, huge balance to be redressed. And my mission is to help women entrepreneurs with their investment campaigns. So sorry, guys, beyond this, I can't help you. But I'm here to support female founders who are looking to raise investment. If you want some help, I have set aside some time in the next couple of weeks to talk with you personally about how you can apply these ideas to your business. And what you need to do is book a fundraising discovery session with me. It's 90 minutes. We do it, I say on this slide, it's a Skype or phone, but I'm actually doing them over Zoom now because every man, woman and his dog is on Zoom. So we do it on Zoom. And what we'll do in that session is talk through your goals, your aspirations, the challenges you're facing. And I'm going to give you some expert feedback and advice on your business investment potential and how you can make it as strong as possible. And what your top line fundraising strategy should be and your step-by-step action plan to raise the money you need this year. So it's about giving you massive clarity so that you can move forward with confidence. So the link at the bottom there is where you need to go. If you're a lady, enterthearena.co.uk/apply 2020. And just so you know, the cost for that session is normally £250 plus VAT. And at the moment, I'm doing it for half price because I'm doing everything I can to help people at the moment. I know how challenging it is. I'm an entrepreneur myself. I'm running an entrepreneurial businesses. It's tough. So at the moment, it's only 125 plus VAT. And I think in terms of the return on investment you're going to see on that, it is huge. So please do take the time to speak to me if you feel you need some help. So that is everything from me. I'm going to stop sharing my screen, put my video back on to say hello to you all. Hi, I'm still here, sitting in my loft. And I'm really happy to take some questions. I think we've got about 15 minutes or so, and I'm happy to go over if that's helpful. Chloe, are you going to take control?
Yeah, Thank you very much, Julia. And that was filled with some fantastic key tips and support for our audience. So let's head over to the live chat and have a look at some of the questions that have come in. So Camilla has asked, I raised 1.3 million last year and used SEIS to attract investors. Is there a cap for SEIS or EIS funding, or is it limited to first time only? Can I still use EIS for my second round?
That's a great question, Camilla. So the SEIS, which is the Seed Enterprise Investment Scheme, is only for the first £150,000 that you raise. And it's only, you can only get it if you're in your first 2 years of trading. So it starts from the minute that you started taking orders. The EIS funding, and I can't remember off the top of my head, but it goes on for a lot longer. It's something, I think it's 7 or 8 years. And there is practically no limit to how much you can raise on that. So you will probably, you will be able to get EIS funding if you've had SEIS funding before, as long as you've not been trading for more than sort of 7 or 8 years. So yes, absolutely, you can do that. You may need to reapply to HMRC to get their advanced assurance to just confirm that. So again, I would recommend that you go ahead and look that up on the HMRC website.
Okay, the next question is from Lisa. Lisa has asked, I have never looked for investment. It makes me nervous to give part of my business away, but feel that it would boost the company. Is there a way to get investment and mentorship / support, i.e. Dragon's Den vibe?
Okay, so the first thing I'm going to say, Lisa, is you are never giving away equity. You are selling equity. I hear that term used by so many people, giving it away. You're not giving it away. You're actually inviting somebody to come in and be a partner of your business. And sorry, the question's disappeared actually. If you, let me pop that back so I can find it now. So you're not giving it away. And in terms of kind of finding the right kind of investors for you, I think it's a really good idea to try and find investors that can also add value to your business, not just about the money. So finding investors that really get what you do and can support you in some way, whether that is giving you some strategic support or opening doors for you. On the other hand, I think it's also the holy grail to find investors that bring you money and the skills and experience that you need. And I would say if you raise enough money, the right amount of money, you can always buy those skills and experience in, and you can find mentorship and advice in lots of other places. You can build an advisory board around you that may or may not be investors. So although it's brilliant to try and find investors that also bring you strategic support, it's not always possible. So don't get too wedded to that idea.
Okay, the next question that's come in, and there's no name attached to it, but it says, are there good examples of pitch decks you would recommend looking at?
I mean, I can't tell you how many pitch decks in my time. There is no such thing as the perfect pitch deck. Every pitch deck I've seen has got problems with it. So I'm kind of almost loath to hold any particular pitch deck up as an example. And I think that it can be quite dangerous to use a templated approach for your pitch deck because your narrative and your story is very, very personal to you. Having said that, there are examples of pitch decks online, and actually you can just kind of type it into Google and see what comes back. One of the things that's quite helpful is there's a website called canva.com, which is a great place for designing pitch decks, and they've got some example slide templates on there that give you some design ideas. But in terms of the actual kind of story that you're telling, that needs to be very personal to you. And if you feel like you need some support on your pitch deck, then do reach out to me. My view is that you can't really copy somebody else's pitch deck and make it work for you. It's got to be quite a personal thing.
Okay, the next question is from Hannah. Hannah has asked, I'm in the process of working with a potential investor. What would your top tips be to keep them engaged?
So this is somebody that's interested in investing in you that you're chatting to. I mean, constant communication, so by email is helpful, but also I would say, see if you can get them on the phone and just ask how they are. Don't forget investors are people too, and really understanding their position, the challenges they have at the moment, what their concerns are about investing right now, what are the things that they are looking for right now, and how they might have changed given the current scenario rather than when you were having initial discussions. I think that's really important. I think so many entrepreneurs forget to actually understand investors and really get to know them. So it's not just about a kind of one-way communication. It's not just about sending out an email every couple of weeks with what's going on in your business, but really engaging with an investor and getting to know them and understand them. So I would encourage you to use this time to build a relationship and understand who they are and what they need.
Okay, great. The next question is anonymous. It says, could you comment on the benefits and risks of an investor asking for participating preference shares in comparison to other types of shares? We've received conflicting advice on this.
I mean, it's quite difficult to give general advice on that because it depends on particularly what it is they're looking for. And I don't know why they would be looking for preference shares. It kind of makes me a bit nervous, especially if it's an early investment round, to give certain investors preference, particularly if that enables them to take their money off the table before others. So it kind of depends on the deal that's on the table. I'm not a huge fan of it, particularly in the early days. I kind of think you should all be in it together. And I don't really like the idea of founders having less rights than certain investors, that's for sure. It can work sometimes when you're doing a bigger round, like a crowdfunding round, where you split the shares into A shares and B shares. So people who are putting in sizable investment get the kind of A shares, which should be equal to you as a founder, and perhaps people who are coming in with much smaller amounts, £500 or 1,000, get B shares, which doesn't give them the same rights. So, for example, they won't have the right to be on your board or have the right to veto certain decisions about hires you make, that kind of thing. So you sometimes see it like that on a bigger round. But if it's a smaller round with just a handful of investors, I would question why they would need preferential shares.
Okay, the next one is from Helene. She asked, would you say that for a small adventure travel business, there's currently no point to look into investment, perhaps in a year or so when the industry might be stronger again?
That's an interesting one. I mean, I've spoken to quite a few entrepreneurs over the last few weeks who work in the travel sector. I think it is very difficult because you don't really know when things are going to bounce back. And I just asked the question, are there some ways that you can pivot during this time? What else can you be doing to keep your customers interested? What can you be doing to generate some income at this time? It may be really challenging. If it's just about you waiting for the industry to bounce back, yes, I think it is probably quite challenging. But if you can find people that really get what you do in your industry, people who know you and trust you and know that you are an excellent entrepreneur that's going to bounce back eventually, you may still be able to secure some investment, but you're probably going to need to make quite an adjustment on your valuation. So that's a call you've got to make. If you can wait and bide your time until A, the travel industry gets going again, and we can see more clearly what that's going to look like, and B, the investment community are ready to start investing in travel, you're probably going to be in a better position. But sometimes we don't have a choice. And if you absolutely need to get investment to keep your business going, then you'll need to make the right adjustment on your valuation.
And the next one is from Lisa. What do you feel or know the chances of success are with and without an investment?
Oh, it's an impossible question to answer. I mean, at the end of the day, raising investment is not the holy grail. In so many ways, if you can build your business without taking into external investment, that is so much better because you retain 100% ownership of that company, full control of what you do. And there are many businesses that have built huge success without investment. So it completely depends. Other companies who raise investment, and because they've raised investment, end up getting in really hot water because they have taken on investors who want a really quick return. So they get pressurized into scaling faster than they might have done otherwise, making decisions that they wouldn't have done otherwise, and failing. So it's an impossible question to answer, and you can only answer it if you had complete 2020 vision. So I'm afraid I can't really answer that one. Sorry.
The next one that's come in is anonymous again. It says, do you know of any travel tech startups that have proved product market fit or demonstrated long-term positive plan and outcome that are currently raising investment?
No. I don't think, I have not seen any travel tech companies raising investment right now. Certainly seen plenty raising investment before this all happened. The companies that are raising right now are really the ones in industries that I mentioned before in the presentation. So the ones that are obviously addressing current challenges in the market, or an obvious long-term play. So, and without really understanding what the sort of tech bit of the travel is, it's hard to say. So again, if you want some more personalized advice on that, then please do get in touch.
Okay, the next one's from Shiraz. Would the investment criteria change comparing to before COVID-19? What investors will be looking for now, knowing the current risks and uncertainties?
Yeah, I mean, I think just to recap on a few of these things that I've talked about, yes, they'll be looking for certain types of businesses that are more obviously going to be successful at this time. They will want businesses to be even more de-risked than before. So this product to market fit piece is really, really important. I don't know if you missed the beginning of the presentation, but really, as far as you can get improving that customers what you want, the better, because those companies that are early on, that are still at idea stage, that are still at minimum viable product stage, MVP stage, are right at the beginning of launch and haven't really proved enough yet, are going to find it very, very challenging to raise investment right now. So the investors are going to be looking for different things. They're going to, the benchmark on everything they look for has been raised.
And the last question that we've got time for is from Shaneska. How would you encourage investors into a sustainable tourism development scenario? We provide training and advisory in this area.
Well, I think if you're looking to raise investment now, you've really, and again, just recapping on a few of the things we've talked about, it's about absolutely clearly demonstrating how you can survive as a business over the next 12 to 18 months, and really clearly demonstrating the long-term value in investing in your business. Because if you can demonstrate that really effectively and demonstrate trust in you and your team, investors may still be interested in coming in right now, as long as you're pricing the company correctly, because they're not looking for returns right now. Investors are, when people invest in startups, it's always a reasonably long-term investment. And it's the same in other markets. Lots of investors are going into the stock market right now because they're thinking now's a great time to invest because it's at its bottom, and the only way, or it may not be right at the bottom, we're not sure yet, but the only way is up. And so they will make better returns in the long term. So it's the same in the startup industry. If you can demonstrate the long-term value in your business and demonstrate that you can navigate the challenges of the next 12 to 18 months, you do still have the opportunity to raise investment.
Okay, that's all we've got time for. Julia, thank you so much for taking the time out to be with us today. I'm sure our audience will agree that this session has been incredibly beneficial for all those entrepreneurs out there currently. If there's anything you'd like to catch up on from today's session, we'll be sending out a replay of the webinar coming shortly. Our next webinar in the Business COVID-19 series takes place on Tuesday, the 14th of April at 2 o'clock. And this will be with Michael Jacobson, who will be talking about freelancers and SMEs, survival in this crisis. If you haven't already, you can register for the webinar using the link in the chat or at freshbusinessthinking.haysummit.com. Thank you for joining us today and have a lovely bank holiday weekend.